Hey folks, Vic here with your weekly trade video for Friday, April the 17th of 2026. So, if you've had trouble cutting your winning trades too early and you want a method of how to let them run with confidence and at the same time still managing risk, which is super important, then Darko's going to walk you through a way to do that. In this video, he breaks down just a powerful trailing stop technique while you're heading toward your final profit target. And it's designed to help you stay in trades longer and extract the maximum profit potential from every move. So instead of guessing when to exit as price is moving towards your final target, you'll learn a structured, objective approach that helps remove emotion and second guessing from the equation. What makes it even more valuable is that the strategy is simple and repeatable. But as you'll see, executing it consistently is where most traders struggle, and that's because of psychological issues. If you've ever watched a trade keep running after you get out, I think you'll find this approach very helpful. All right, so here's Darko to explain it.
Hi everyone, Darko here for today's bonus video about trailing stop loss. Okay, I have been getting the question several times when I do my PMAs that I use an expression that if I get filled in here, I will be writing that baby down into the next level of opposing level on a daily chart, or writing that baby up to that opposing level, or trailing my stop loss. And people want to know, what do I need? What do I mean by that? Okay. And I'm trying to be as educational as possible and be as clear as possible. So once you listen to this PMA, or at least this bonus video, there will be no confusion about what I mean. And just have in mind that everything I do needs to be very simple. So that means if this sounds very simple to you and you might think, hey, I must have been understood something important, because it cannot be that simple. So, and you start complicating things, and everything you need to know is in this bonus video. So if it's not here, you don't need to know about it. Okay, and this is a trailing stop loss technique or system that I've been doing for myself, and that I have developed on my own throughout the years of trading. Because let me ask you this: how many times have you pre-exited a trade? Like, honestly, like, happens way too often, right? So I did that for many years. I didn't know why that happened, because I would say it's very annoying to know that you only benefit from like less than 30% of the full potential of that trade. Okay, and what I mean by that, like, if the range is 100 pips, you maybe benefit like 25 pips, and then you see the charts move or the price goes in your direction for another 75 pips until we reverse at a very logic level. Okay, and that's very annoying. And it's not only annoying, it's actually devastating for your trading, because you always need like so many trades to be barely break even. Okay, and it's very hard, because for the past 14 years I have been trying so many things and nothing worked out, and the money management part is very, very challenging. So, and like everything else I do, this is 100% my own approach that is being tested for very, very, very long time. I haven't get this idea from anyone else and make it my own or anything. It's just like more based about advanced market flow. Okay, and just have in mind, it's almost impossible to always benefit 100% of every single given trade, because that's the market. We cannot control how it's moving. And as you also know, that everything that I'm doing in trading is actually around advanced market flow, beside ACAT, of course, but everything around intraday approach is around advanced market flow. So it would be very beneficial for you if you at least knew as much as possible about advanced market flow. Okay? And obviously I will always show a drawing version first to just explain what I mean, and then I will show you live examples. Just have in mind, like, I hate hindsight coaching, you showing you like 3,000 examples, like, hey, you should be doing this and that. That's all BS. So I will just show you a couple of examples just to illustrate what I mean. The rest is we do it live. okay, because I'm a live coach. So this is what I mean when you hear my PMA, like, hey, you know, if I enter this trade, I will be riding this baby up into this next level. And now you know what I mean. And from now on, we just call this trailing stop loss technique. Okay, so we don't confuse our new members, like, what do you mean by this and that? So this is a trailing stop loss. Okay, so yeah, are you guys ready? So what are you waiting for? Let's get started. Let's see here. So as you all know, I'm a day trader, so I will just, when I'm referring to the time frames, it's all scalable, guys. It's all scalable, okay? So just because I'm talking about day trading, that doesn't mean you cannot use this for micro scalping, day trading, swing trading, position trading, okay? It's just like everything else I do. It's scalable. But I only cover day trading because I'm a day trader, nothing else. So this trailing stop loss technique usually, I would say not always, is doable or at least applicable when price hits both daily and weekly key level of support or resistance. In this case, it's support, and obviously it's the opposite for resistance. I'm only showing you the longing one in here in my drawing tool because it's pure the opposite for shorting. Okay, so in this case, price hits a super level on a weekly and daily chart. Sometimes it's not a weekly level, but it's like a super key level of support on a daily chart or resistance. When that happens, and then also you mark your next like major level of resistance in this case, because we are hitting support on your higher time frame, which is your daily chart. So sometimes it could be daily and weekly combined. Okay, and this is where you need to like use the everything I teach you, like and dealing with that game plan. Okay, so price hits a level that is super significant, and then you mark also your opposing super significant level, and you just mark the distance, like how is it from here up to the next level of my daily / weekly chart. Okay, it could be both weekly and daily, or only daily. It needs to be like an opposing super level. Okay, and then for some reason, let's just assume that you enter around in here. Ignore that this is a head and shoulder, whatever that might be. Just like pretend it's an ACAT. This move in here and this is your hourly chart. This is your entry time frame. Your entry time frame puts you in a trade, whatever that reason might be. Could be ACAT, could be intraday trading, could be whatever that you are using. You just got filled after price hitting a significant level. Okay, you see my cursor in here. You just got filled. Good. So the initial stop loss is obviously 7 pips below. That's what we use. And then price goes up, and now I need you to pay close attention. It feels like regardless of how clear I am, it's still people asking some super obvious question against what I'm teaching. Price needs to make a higher high, higher close above the previous highest point of the previous swing. Okay? Let me just repeat that, because I don't want anyone to ask, hey, is this a new swing high because we just wicks it by wicks? Make a higher high by wicks? No. A new swing high is only when price is making a higher high, higher close. That means the highest point, the highest closing point where I have my cursor needs to close above the highest point of the previous swing. It might be by wicks or by whatever that might be. The highest point of that swing. Super important. Don't overcomplicate it. It's very, very simple. Okay? So now you move from 7 pips under 7 pips below this swing. And then hopefully price comes down, makes another higher low. You don't do anything until price makes a higher high, higher close. That means the highest point of closing point on this new swing needs to close above the highest point of the previous swing. Okay? Now you trail it from 7 pips from here, 7 pips from here. And you just continue doing that until you get stopped out. Sometimes you get stopped out before we hit an opposing level. Sometimes you just, ride that baby up, trailing it up into that next level for maximum amount of profit. Okay, and if you get stopped out premature, like early on those trades, just have in mind that this is back tested for 14 years or more or less. So at least professionally for the past 3 years. So it's not like I just wake up one morning and I have a brilliant idea and I make a bonus video out of it and give the impression that this is working. I know it. Okay, so if it's not working for you, you are doing something wrong. Okay, so it's super simple. It's not not a rocket science. You just move your stop loss. Many people don't have the patience. You are so nervous. Like every time you enter a trade, you are so nervous. When you are up like 10, 12, 15, 20 pips, you just become so nervous. Like, what if this trade goes against me and I plus 20 ends up minus 10 or minus 15? And this is the iron mindset that you need to have as a trader. Otherwise, you'll just pick small profits here and there and you take full losses and you will never get where you want to be. Okay? So that's obviously it. Don't have anything more to say about this. So you just trail it until you get stopped out. Hopefully price hits an opposing level on your daily chart. Okay? That daily might also be a weekly resistance as well. Could be both or either way. Okay? Or sometimes you just get stopped out before we hit an up, and that's trading. Just move on. Okay? It's exactly the opposite for shorting. So I don't cover that. So let's go and do some live analysis. Okay? Let's see here. And here's the thing. I just show you the techniques. Okay, this price don't need necessarily be at any super level. So the live coaching part of it, we will do that live. I'm not a hindsight coach, so I just show you the techniques. Okay, let's just pretend. In this case, I know that this is also a weekly and a daily resistance. Okay, I know we did not take this trade because price did not gave us an opportunity. Ignore that. Just focus on the process. Okay, let's just pretend that this is a super level of a higher time frame resistance in my case weekly and daily. Okay, then let's just assume that you for some reason get involved. Just give me 1 sec, guys. Sorry about that, I needed to sneeze. So let's just assume that for some reason you get filled in here with a high stop loss. Just pretend. Okay, this is only to show you the method. Okay, then price do this. Do you see how we made a lower low, lower close? Price closed under the lowest point of this previous swing. Now suddenly your stop loss is from here down to 7 pips above this swing high. Okay, 7 pips above this level, which is like around this level. Okay, and then price goes down. Just focus on the major swings. Don't overcomplicate this. Okay, made another lower low, lower close. Do you see how this is closing under the lowest point of this wicks? Yes. Now in this case you cannot move because price coming up again, and now do this. We breach this by wicks. This is lower than this one. What did I say? What did I say? Let's see here. Where's my... I cannot open that for some reason. Don't worry about it. I said it needs to be a lower low, lower close, not only a lower low for shorting, and obviously the opposite for longing. So your stop loss is still in here until price do this. Okay, and you see that we are closing under this lowest low. That means now you move your stop loss from 7 pips above this one, you move it to 7 pips above this one. Okay, and then obviously price do this. There's nothing more today. This is not a swing. And then price goes up again, comes down, breach this by wicks. Do you move it? No. Needs to be a lower low, lower close. I almost bet that someone would ask me, hey, is this a new swing low? Like, geez, listen to what I'm saying. And now price is coming down. Now we made another lower low, lower close. Then you move your stop loss from here, 7 pips above the highest point. In this case, these are equal, so 7 pips above this high. Okay? Price comes down, goes up, comes down again, makes another lower low, lower close. Now you trade at 7 pips above this one in here. And you just continue until you hit an opposing level. I have used these techniques, and this is where like you bring the meat of the market, like those juicy moves. Okay? And I can promise you, you will never ever be able to do this unless you have an iron mindset. You have to be very strong mentally, because imagine all these hours, prices coming down, almost stops you out for like barely break even, comes down, and then you see all these pips and then goes up. Oh my gosh, you start panicking. This is very easy to show you in hindsight, but it's demands like you have a mindset like no one else in the market. Okay, this is not for type of people that are nervous about everything. Okay, so you either do this properly or you just don't do it. Okay, so if you want to know how you could be like down 4 losing trades, 4 full losses, and still be in profit, because when price goes in your direction, you don't stress about it. You're not nervous. Okay, you make like 100 pips, 120 pips unscaled. Okay, unscaled. I hate scaling. Scaling are for amateurs. Like, why are you so nervous? Like, do you have a proven system or not? You either have it or you don't. Like, by micromanaging every single pips and jumping up, that's because you are not trusting your system. You have not done enough back testing, forward testing, live testing. You don't trust what you are doing, because if you have faith, then why are you so nervous? Okay, so, and I do this all the time on many trades that we are taking. The problem is I cannot go out and affect your mindset like, hey, I'm using that trailing stop loss. It's not my job to tell you everything, because I want you to be an independent thinker. Okay, so sometimes I'm in a trade, I risk 30 pips, I'm out like 3-4 days later, and I don't even don't have an urge to mention it, because I manage my trade the way I do it, and I don't want, because if I tell you I'm trailing stop loss and then price do this, stops you out from like plus 40 down to barely like break even, or maybe plus 3, then everyone gets crazy. Hey, I was up plus 40 and you say you are trailing this, and now price went against me, and now plus 40 end up like minus 5 or break even. So therefore, at some point you need to do this for your own. I'm just showing you the way of doing things, and the rest is up to you. Let's do AJ. Okay, and this was actually a live trade. Okay, we get filled in here. Price hits a major level of resistance, and then we get filled. This was an intraday opportunity, if I'm not mistaken. Don't worry about it. Just focus on the process. Okay, and this is your swing low. Okay, and yes, there was some FOMC minutes you might move your stop loss to break even for news, and that's totally okay. I'm just teaching you how this could be done if that's in alignment with your game plan. Okay, now when price do this, there's nothing for you to do until price makes a lower low, lower close. Okay, price comes down. Now you put your stop loss from here up to 7 pips from here, and look at the distance. Like, price is so low, you are like up so many pips, and you are so nervous to give all this profit back, like, oh geez, well, I'm doing this to myself. Okay, because that will happen to you. Price will stops you out when you are like plus 50, stops you out like for break even. But I know in the long run, if you just are consistent, which 95% are not, this will be a game changer for your money management. Okay, now you get rewarded. Price makes another lower low, lower close. Now you can take a deep breath. Okay, now you move it 7 pips above this one in here. Price goes up, makes another lower low, lower close. Price is closing under the lowest point of the previous swing. Now you move from here up to the 7 pips, and now you get stopped out. If this level in here, where I have my cursor, is your opposing level on your higher time frame, I'm not talking about tick charts, guys. I'm not talking about 5-minute charts. I'm not talking about your entry time frame. I'm talking about daily and weekly. Either both or one of them. If this level is your opposing level on your higher time frame, then you exit. You don't wait to get stopped out, because that's a no-brainer. If price hits that level, just exit. Okay, don't try to be too like greedy. Just take the last 5 pips and give back all these pips because you didn't watch your opposing level on a daily chart or weekly or both. Okay, so if this is your higher time frame opposing level, then just take profit. Okay, and if this was not, where obviously you got stopped out, everything is good. Do you see how many days like we got filled in here? Like this is a half day, this is the entire day, 1 day, 2 day, 3 day, 4 day, 5 days. Like do you honestly have the mindset of leaving things alone for an entire week? And you might ask, hey Darko, what about the weekends? How do I do over the weekends? Well, what does your game plan tell you? Do you have a written down game plan? Are you consistent? Do you have in backtesting how to leave trades in the background, like in the market? Well, we have bonus video about that. Okay, how to trade around news. I think like what is the news over the weekend? Is there anything happening over the weekend? Might be unexpected. Yes. If you are super nervous about it, just exit. Okay. If not, now you can scale. I will be covering my trade management in the next bonus video, so I won't be doing it in here because this is pure about trailing stop loss. And if you keep this over the weekend or not, that's depending on your own game plan. There are no checklists, because if I tell you leave it and then something happens, you say, hey, you said leave it, and now I'm down, I get some ugly slippage and now I'm down 100 pips. It's your call. Okay, this is only about the technique that I'm using in the background for my trailing stop loss. Okay, let's just show you one more for like bullish, and then we are done. I don't want to make this too long because it's not hard. It's super simple. Okay, let's just assume I just make this quickly. Let's just assume that this is support. Okay, and you get filled somewhere in here. Okay, for some reason you get filled in here, and then price do. Let's see here. Price do. Give me 1 sec so I don't do this wrong, and then I get 3,000 questions. You got filled in here, and price makes a higher high, higher close. Okay, you make a higher high, higher close. Now your stop loss from here up to here. Okay, price comes down, makes another higher high, higher close. You move from here 7 pips below. Price comes down. You see how we breached it by wicks? Is this a new swing high? No. We need a higher high, higher close. Okay? You just trail it until you get stopped out or either hit an opposing level on your daily chart. That's it, guys. It's almost 23 minutes. I thought this will be only like 10-15 minutes bonus video. That's it. Don't overcomplicate it. Don't make this into a rocket science. Make sure you understand the advanced market flow and use it accordingly to my rules that I've been using for many years, that is proven in the market, in the live market. The rest, we will take it live. Thank you so much for listening, and have a great day. Bye-bye.
So, the difference between average traders and consistently profitable ones often comes down to trade management. And cutting winning trades too early can totally undermine everything. Start applying just this simple trailing stop approach. Stay disciplined with it. You may be surprised at how much more you can pull out of the moves that you're already getting in on. Over time, that small shift in execution can make a massive difference in your overall results. So I hope that was helpful. Thank you so much for listening, and wishing you all a great weekend and trading week ahead. Take care.